The world is rearming in a big way. And India is right at the center of it all. We're on the brink of what analysts are calling a defense supercycle, this huge period of growth expected between 2026 and 2030. So in this explainer, we're going to unpack the big investment case for India's top defense players. We'll look at what's really driving this massive shift. Ready? Let's get into it. But first, before we dive in, we have to get the standard disclaimer out of the way. Investment in the securities market is subject to market risks, so please read all related documents carefully before you invest. Everything we're talking about today is for educational and informational purposes only and is definitely not intended as investment advice. Okay, let's do this. So just how big is this opportunity we're talking about? Get a load of this number, $2.6 trillion. And that's with a T. That's the projection for global defense spending for 2026 alone. I mean, that's just a mind-boggling figure, and it's the backdrop for everything we're about to get into. The sheer scale is exactly why everyone's paying so much attention.
What's really driving this, though, is a deep, fundamental shift in thinking. And you can boil it all down to this one simple phrase. We're moving from just in time to just in case. Think about it. For decades, the world ran on these super efficient, lean supply chains. But now? Well, now things are a lot more uncertain, and countries are bulking up, stockpiling, and getting ready for pretty much anything. This just-in-case mindset, that's the real engine behind this whole supercycle.
Which, of course, brings us to the big question. Why now? What's going on that's making this all happen at this exact moment? Let's break down the key drivers that are creating what you might call a perfect storm. It really comes down to two major forces. First, there's the global geopolitical shift. You've got NATO countries cranking up their spending, and conflicts in Eurasia are creating this massive surge in demand for munitions. And second, and this is really crucial for India, is that the Atman-Bharata, or self-reliance policy, is finally coming of age. We're moving past the prototype stage and into real mass production. And what has that done? It's sparked an incredible export boom, with Indian defense exports now crossing 35,000 crore rupees. So to really get our heads around this complex landscape, we need a simple, clear framework. So we're going to use what we'll call a super cycle basket strategy to look at the 6 biggest Indian defense companies out there. Our approach is pretty straightforward. We're breaking these companies into 3 different groups. First, we have the titans. Think of these as the big, safe anchors of the sector. Next up are the exporters, the ones we see as potential alpha generators, the ones that could really outperform. And finally, we've got the event plays, which are more like tactical bets that are tied to some very specific things happening on the horizon. All right, let's jump right into our first bucket, the titans. This group is all about the 2 industry giants, Part Electronics Limited, which you know as BEL, and Hindustan Aeronautics Limited, or HAL. These are the foundational bedrock players in this whole supercycle. So what's the difference between them? Well, here's a simple way to think about it. HAL is the aviation monopoly. They build the big stuff, the fighter jets, the helicopters, the actual platforms. BEL, on the other hand, is kind of like the Intel inside of Indian defense. They're the ones providing all the high-tech, high-value electronics, the radars, the sensors, basically the brains that go inside those platforms. And if you look at the numbers, they really tell the story. First up, HAL. Just look at that order book. We're talking nearly 2.45 lakh crore rupees. It's massive. And it's backed by their domestic monopoly, which is their moat, right? Their big competitive advantage. Then you've got BEL. Now their market cap is a bit higher, and you'll notice that premium valuation, 35 times future earnings. So why the premium? Well, it's all about their asset-light model and the fact that they're grabbing a bigger and bigger slice of the value from every single thing that gets built. Okay, let's move on to our second group, the exporters. Here, we're looking at Solar Industries and Cochin Shipyard, or CSL. These 2 are great examples of how India is plugging itself into the global supply chain, not just for defense, but for commercial work too. Now, these 2 companies have totally different stories. Solar Industries is all about consumables, things that get used up. We're talking munitions, propellants, warheads, stuff that has to be constantly replaced. CSL, meanwhile, builds the Navy's backbone, aircraft carriers, support ships. But they also have this really booming business building eco-friendly, green commercial ships for clients in Europe. And again, the numbers really highlight this. Solar Industries has this super high valuation, a price-to-earnings ratio of 48. And that's because of what's called a scarcity premium. and just how fast its high-margin defense business is growing. CSL's strength is different. It's in its diverse order book and, get this, its ridiculously profitable ship repair business. That segment is an absolute cash cow for them, bringing in 40% of profits from just 25% of their revenue. And that takes us to our final group, the most tactical of the bunch, the event plays. Here we've got Mazagon Dock Shipbuilders, or MDL, and Barrett Dynamics, BDL. The story for these two is all about very specific, high-impact events that are just around the corner. The key thing to understand here is the nature of their catalysts. For Mazagon Dock, which is India's top warship builder, pretty much everything is riding on one single massive submarine deal. For BDL, the missile specialist, it's a different story. They're riding a huge demand spike that's happening right now, finally clearing out a huge backlog of orders now that supply chain problems are easing up. So let's just focus on MDL for a second. Its entire future is pretty much tied to one thing, the Project 75 India submarine contract. This is the 43,000 crore rupee question. I mean, if this deal gets signed, MDL's order book could more than triple, literally overnight. It's a true make or break moment for them. Now, let's flip over to BDL. This isn't about some future hope. This is happening right now. As those global shortages of semiconductors and sensors finally went away, BDL's production lines just roared back to life. And the result? Well, you can see it right here. Revenue just exploded, jumping 110% year over year in a recent quarter. This is a company that is right in the middle of a massive turnaround. Okay, so we've looked at the titans, the exporters, and the event plays. Now it's time for the final verdict. Let's put this all together and see how these 6 major players really stack up against one another. This chart right here gives us that perfect bird's eye view. You can see the whole spectrum of valuations. You've got MDL down at 28 times forward earnings. That reflects the risk of that one big contract. Then all the way on the other end, Solar Industries at a whopping 48 times, which is pricing in all that future growth. And check out the order book coverage, the order book to bill ratio. It tells you how many years of work they already have lined up. For companies like HAL and BDL, it's about 8 years. That's incredible visibility. And finally, that high return on equity, or ROE, for companies like Solar and BEL, it just screams efficiency. They're just really good at turning money into more money. So, what's the bottom line here? The big takeaway is that the entire Indian defense sector seems to be going through this deep structural re-rating, and it's being pushed by these incredibly powerful forces both at home and around the world. And that leaves us with this final thought. The question for investors isn't really if they should be paying attention anymore, but how they should strategically approach this supercycle as it unfolds. And we'll end right where we started with one last reminder. Investment in the securities market is subject to market risks. Please read all the related documents carefully before you decide to invest. All this information was for educational and informational purposes only and was not intended as investment advice. Thanks for joining us for this explainer.